We have an English presentation again. It will be from Enrico Camerinelli. He's working for the Aite Group as a senior analyst. He's well known in the industry, and he's talking about some very progressive topics. And the main topic is the decentralized finance. With his personal view, he will try to make a bridge from his topic to the factoring industry. We need to think about the future, look forward, be prepared. We want to drive with the train and not run behind. Enrico, the stage is yours.
Thank you very much. Good morning, good afternoon. Vielen Danken. Grazie molte. As just anticipated by the presenter, I'm going to touch on a topic, decentralized finance, that is gaining particular interest and traction. My intention is not to sell decentralized finance or DeFi, as it is called, but is exactly to bring this topic and the technologies behind it to the attention of you as practitioners, because most likely this is something that will become more and more attractive and interesting. The very first part of the majority of my presentation will touch upon what DeFi is today. And just the last slide will be more of a speculation, because actually the technology and the whole, let's say, ecosystem is still too young to really think of already having applications in the corporate world. But I've made a few thoughts and just want to share them with you. So again, when I'll come to that slide, I will just bring up this the attention that this is my speculation, my sort of anticipation. I hope that I will be right, but just take this with a grain of salt. The next step is defining what DeFi is. DeFi stands for decentralized finance, and in simple terms, it is a collection of financial applications that utilize blockchain technologies and networks. So we are talking about financial applications, and I will give some clear examples. And the underlying infrastructure is blockchain. So I'm assuming that people that are listening today are familiar with blockchain, not necessarily super experts, but at least know the basics. If not, that perhaps this can be an opportunity to go and sort of learn, because let's say blockchain is becoming more and more like the internet for people who operate in the digital, especially in the financial world. Now, I do understand that I can switch my camera so you can see me, but honestly, I don't know how to do that. So either somebody switch camera, is this one? No. Well, I hope you can see me. Anyways, I'll keep on presenting. The reason why I'm saying that what's happening with DeFi is important, at least to understand why we should start looking at it, is because there are clear signs that something that, let's say, is the foundation, or it's something that is happening that it goes beyond the traditional financial technology, and that requires more sophisticated and advanced solutions. So I've just taken here a few screenshots of very recent articles. You see, they are dated July, September of this year. And they all speak about financial institutions or monetary organizations like the Monetary Authority of Singapore that are moving, first of all, into DLT. DLT stands for Distributed Ledger Technologies, or decentralized, as many people like to say, ledger technology. And so it's basically the foundation of blockchain. And also moving into digital assets. These articles here do not speak about DeFi. They're still, let's say, between the current so-called centralized finance, so traditional way of running, financial products and solutions, the traditional way the banks have been working so far and still work today. But they are somehow a step beyond the centralized finance, just because they're using DLT, that are the basics of a decentralized and distributed applications. And so let's say the reason why I'm saying that something is happening in the market, because the announcement that we see from these big players are going beyond what is the current and traditional finance today, financial technologies today. And so they're moving to something new. And at the other edge of this something new is decentralized finance that I'm going to illustrate right now. So the DeFi stack, I'm not going to go into this for a lack of time. So I will just focus on actually what is most important, what I call the enablers. So what is at the foundation of the whole DeFi architecture? We have three major components, so three major enablers. One is the fact that DeFi works on permissionless blockchain protocols. The second is that DeFi operates by means of smart contracts. And the third is this, while those of you who are familiar with blockchain already know what permissionless blockchain protocols are and smart contracts are, and if not, I do understand that we do have a question and answer session at the end, so you might want to ask me if you need some additional clarification. But stable coins is something rather new, I would say, to the majority. And actually, stable coins is something that in the previous slide was called central bank digital currencies, or CBDCs. So basically, these are digital currencies, or you might want to call them cryptocurrencies, because they are operating by using crypto algorithms. But contrary to the current cryptocurrencies like Bitcoins or any other form of, say, cryptocurrencies that today are exchanged on digital exchanges, the stable coins, the name says, they are stabilized because they are pegged against a fiat currency. Could be the US dollar, the British pound, the euro. And so the volatility, or the problem that current cryptocurrencies have, cryptocurrencies run on blockchain protocols and on using smart contracts. But current cryptocurrencies are very much volatile. And this is why they are so interesting, because speculators really, or traders really want to take advantage of these big hikes. But if you are moving into a more business-related environment, you don't want to have this volatility. You don't want to have a currency that today is 10 and tomorrow is 20. You want to have something that is stable. And so, as much as, of course, fiat currencies are stable, also currencies have fluctuations, but there are some are regulated by central authorities, and so there are monetary policies that allow this stabilization. And so stable coins are digital coins or crypto coins that are attached, if you will, or they are connected, or the technical term is they are pegged against fiat currencies. Now, so these are the foundational elements. Now, again, to answer the question why DeFi, let's see what are the current use cases. So current applications today already happening. One is, for instance, borrowing and lending. There are protocols, there are platforms where, for instance, you can borrow and lend, most importantly, these stable coins. With current cryptocurrencies, lending is rather problematic, and also borrowing. But with stable coins, or with the DeFi construct, really you can also basically gain interest on the stable coins that you lend. And to do this, the possibility by borrowing, of course, you need to provide a guarantee. Normally, if you borrow, from a bank, you have to give as a guarantee your asset, your house, or some collateral. In DeFi, you can collateralize digital assets. Typically, what is collateralized are the ethers. So the digital coin or the cryptocurrencies of the Ethereum protocol, which is by the vast majority, the permissionless blockchain that is used to run DeFi projects. And also, when borrowing and lending, there are cryptographic verification methods. So the whole KYC process is done automatically. One of the big promises of DeFi is that it is really peer-to-peer. So you have no intermediaries at all to control what the operations are. And of course, this also generates some risks that we will see later. The second type of use cases, and there are already platforms, and I have a slide that shows later on who are the players in this ecosystem, decentralized marketplaces. So in this case, the exchange, the trading of the stable coins or the cryptocurrencies within the DeFi platforms, they are all managed automatically by virtue of smart contracts. So the terms, the expiration, the control of the stability of the stable coins against the fiat currencies, all this is done automatically through smart contracts. So it is very important that these smart contracts are properly written and designed. Monetary banking services is another group of use cases currently possible on DeFi platforms. And for instance, this is something that gets close to, let's say, supply chain operations, is the ability of paying using stable coins. So instead of paying using, let's say, making a credit note or a payment in euro or dollars, you can use the stable coins that, again, they are stabilized against these fiat currencies, and you can start paying, reducing or eliminating totally the intermediaries, especially when it comes to cross-border payments through DeFi. You totally eliminate the intermediaries such as correspondent banks or any other intermediary that is sitting between, let's say, the buyer and the seller, or the creditor and the debtor, that are this current construct in current centralized finance, is making the processes longer and more expensive because, of course, each one wants to have a piece of the share. I said before that one of the, let's say, risks or current facts of DeFi is that it's totally based on the execution of smart contracts. And so there are also insurance services that are created, that are running on, or let's say they're connected to these DeFi platforms. And their role is exactly to protect the traders, those who operate on DeFi in a peer-to-peer fashion, whether to basically protect against the risk that a smart contract is badly written, or that there are, although the stable coins, prevent any kind of fluctuations, but you can never say never. And we know, that we can never say never, especially during this terrible pandemic situation. And so we see now there are some platforms, or rather programs, that are there to ensure the traders that if some conditions are happen, they will be refunded, or basically they will be protected against the happening of some specific events. I was speaking about the ecosystem. Now, for each of those use cases that we saw before, there are many players out there, and I just wanted to share with you, again, given the limitation of time, but also because the intention of this short presentation of mine is basically to bring up this new notion to you. You can see there are already many players, and in those boxes basically are showing the use cases. So the ones that I explained to you in the previous slide were, let's say, the most frequent, or the ones that already are getting a level of maturity, and they are the ones that are actually moving the value of, let's say, the market cap that you see in this bottom right chart here that shows the value, let's say, of the total, let's say, equivalent in US dollars that is moved has been moved since August up to October of this year. So you can see that the value that is being exchanged on these platforms keeps on growing, while, let's say, the value of the stable coins remains more or less pegged around the dollar. And you can see here that this ecosystem, the picture on the top left, speaks about Ethereum's DeFi, because, as I said before, one of the enablers of the DeFi stack are permissionless blockchain protocols. And of these, let's say Ethereum is the one that is the most utilized. And say the cryptocurrency of reference is the Ether. And you can see that there are many, many players. Each of these is a platform. They have their white paper. And the interesting thing, as opposed to what happened a few years ago with ICOs, with initial coin offerings that were based on cryptocurrencies that were fluctuating in the market. The ICOs were basically based on a white paper. Somebody said, I have a great idea. You put your money in this, invest your money in this initiative, and when the project will run and will be successful, you will get a piece of the returns. In very few cases this has happened. So many people have lost a lot of money just by having faith in that particular cryptocurrency would have grown just because the project was so good that people would have invested and demanded for cryptocurrencies. This has not happened, but in a few cases. To avoid this is why with DeFi, first of all, the coins are stabilized, so you don't have any more of those fluctuations. And so this is really much based on the validity, on the fact that today it's still used on a more, if you will, retail or consumer based. So this is a investor, or let's say anyone. My brother, for instance, he had some liquidity at hand. He said, if I put it in a bank account, bank deposits, how much interest will I get? In Europe, there are also negative interest rates. And so he said, well, let me put it into a DeFi platform. And actually, he's gaining double-digit returns. Now, this is a positive effect, but also has some inherent risks that we'll see very soon. So I'm not encouraging anybody, to make any investments in DeFi. I'm just showing you what the situation is. We are still far away from a business-to-business application of these DeFi protocols, but in more of a, let's say, consumer-to-consumer or peer-to-peer, which is exactly the best term, we already see people trading, borrowing, and lending these cryptocurrencies, and you see that the aggregated value of the equivalent in dollars of the stable coins exchange keeps on growing. And also the fact that by reducing costs, by streamlining operations, and by reducing all the unnecessary intermediaries, all the activities are really based on pure profit. And the way that these platforms, let's say, survive or make money is because they keep a share, or let's say a fee for the service provided. But in absolute terms, those who are already operating on these trading platforms, they are getting very interesting returns. But again, this we are still have to see if this falls, let's say, into the same trap of Bitcoins, for instance, that are mostly used as just for speculation and nothing more. Or instead, it is possible to start using these digital currencies also as assets that represent value, and therefore the possibility of using them as means to exchange and to pay for goods and services. I am very confident, before coming to the risks, let me go back one second. I'm very confident that the DeFi construct will have possible success because of the appearance of these central bank digital currencies. So these are basically the same notion of stable coins, but issued directly by central banks. There are big talks, especially the pandemic has urged the need of finding ways to make sure that the money gets to the people who needs that money, and making sure that from a central bank perspective, the distribution of, let's say, liquidity in the economy follows some precise rules. And so in my opinion, if DeFi had not the sort of this looming, I would say, attention and growing practice around central bank digital currencies, I would have said, well, DeFi might be interesting for traders, for those who want to speculate, but I don't see any potential for a business-to-business environment, neither for factoring. But the role of central bank digital currencies that actually will take the role, could replace the stable coins or play as stable coins, but reducing the complexity that DeFi algorithms have today to ensure the stability of the cryptocurrencies by means of having a central bank digital currency that is stabilized just because it's coming from a central bank. It might reduce, the ideal situation of having everything permissionless and completely decentralized. We know that we'll still need to have some sort of authorities that regulate and ensure that operations are properly executed. And so my expectation is that the more we will read about central bank digital currencies, the more the DeFi construct and protocols and platforms will gain much more interest also and especially in the B2B environment. There are risks, of course, three kinds of main risks. The first one is a risk associated with how the users use the product or the service. Again, if people are just using it to speculate because, if you invest, if you lend money, you get double-digit interest, there might be a misuse. And so this is a potential risk. Second is financial, because everybody likes to have super returns. But again, this is based on solid financial principles. And so the risks, the returns are high, and therefore are the risks and the financial risks. And the technical, which is last but maybe the most important, we have seen, for instance, there are insurance platforms to protect from let's say, badly written or engineered smart contracts, or everything is decentralized, is based on the execution of automatic algorithms and programs. And so there are always risks from a software and a hardware perspective that something might go wrong. So again, I don't want to give the impression that I'm preaching the beauties of DeFi. I'm just saying this is something that is happening. There are signs also from the current financial world that something is going beyond the traditional centralized finance. And DeFi seems to be, the possible, I would say, outcome, just because it's already there. But there are these risks that need to be taken into consideration. My last slide. So until now, I have explained, hopefully in a meaningful way, what DeFi is, how it works today, and what are the inherent risks. This one slide, which is my last slide, is, as you see, is my expectation. So if we're looking at a specific, say, business domain such as factoring, how could, in the future, DeFi play a role in factoring? And you see that I have identified two, say, components of DeFi, which I believe are instrumental or make, let's say, factoring on DeFi possible. And the one very important thing I want to say is that tokenized assets and CBDCs, so central bank digital currencies, are already happening now. They're already existing now. So from a pure technical perspective, they can be operated immediately. Now, how can we use tokenized invoices and CBDCs in, say, a factoring life cycle? Well, as you know, what happens normally is that you start with a purchase order, becomes a sales order, then a shipping order, then a bill of lading. Okay, you know the story. So we move from the purchase order. Of course, the value chain could be much longer, but I just want to highlight, let's say, the sub-processes that typically get from an invoice becoming a receivable. And then that's where you have the factoring sort of player in between that decouples the receivable to make from the payment and actually, accelerates the payment and follows a different process until the settlement. Now, a token, a digital token, so something that represents on a blockchain protocol, these different steps is already possible. What I mean is that the reason why we are having purchase orders, sales orders, and all these different, say, orders and components in current technologies today is because each supply chain party has its own system. And so everybody wants to have a piece of the truth. They say, you have your purchase order, but I want to have my sales order on my system because that is my source of truth. But having tokens or digital tokens on blockchain eliminates the need of having all these different assets. We have just one asset that can be exchanged from one party to another. So by just moving the token from the buyer to the seller, that becomes an order basically to buy goods and so on. Then, so factoring, the factor, could receive a token that contains, because it has progressed along the value chain and has been stored on blockchain, has changed the state when moving from, say, from one party to the other, the factor would have visibility of what this token represents and who owns it. And then for the payment, we could use the central bank digital currencies to pay and settle, in this case, the supplier. But the important thing is that once all these different steps of the value chain are tokenized, the token itself becomes an asset, can be exchanged. Just like today we see that electronic invoices that are put on blockchain, they are digitized, or invoices with supply chain finance platforms, you can securitize them and exchange them on the secondary market. This can already happen, and this is what's happening in DeFi, when exchanging and trading and borrowing and lending, in that case, they are stable coins, but nothing prevents that a token, since a token can be stabilized, to use it as a means of exchange. And the payments can happen with central bank digital currencies that by nature are stabilized because they represent, say, the electronic equivalent of a euro, of a dollar, or whatever currency the central bank will be issuing. So, but this again is my thinking. I'm doing research on this. If you ask me, is anybody doing it? I have to say no. But I'd be very happy to start, talking. I know, for instance, the Factors Chain International is looking at blockchain with interest, not because of this, of course. This is my, if it's going to happen, it's I will take, let's say, the success of it. If not, I will take the blame. But I know that in the factoring world, blockchain is starting to become an area of attention, and therefore my recommendation is for you who are in the blockchain world, in the factoring world, start looking beyond. So don't wait for the train to pass by, but jump on the train and enjoy the ride. So with that, I finished. I guess that there are one or two questions. So shall I read them and answer them directly? I think that's what
please.
Yes. So the first question is, with the ICOs, there was a huge bubble that burst in 2017. Will there be a similar development at DeFi? The answer is DeFi is too early time to say that. Of the three risk factors that we saw, the procedural, which was the first one, it very much depends on how people would use it. The risk is that if the tendency now is to look at DeFi just as a place where you can get huge interest from your deposits. The fact that the coins are stabilized, it gives me a higher confidence that the bubble that we had with ICO will not happen with DeFi. What I would watch instead is DeFi going to remain in the era of speculation, of trading. It's not bad, but it's something, so it's more for the individual, the private investor, or is it going to be a platform, is it going to be a construct that will facilitate the business-to-business exchanges and eventually become a foundation also for factoring? We don't know this yet, but I don't expect a bubble to burst for DeFi. The European Commission adopted last month a digital finance package. What do you say to this step? Well, I very much welcome it. because this is exactly, you know, let's say I would say the evidence that the fact that the financial world is moving from the current centralized systems into something not only digital, because everything now is digital, but digital on new infrastructures. I would say that this paper that has been issued by the European Union, European Commission, really shows that there's no U-turn. There's no way to go back. And this is why I don't think there will be a burst, because once CBDCs, which is all about this European paper in essence, once they will sort of become reality, then the DeFi platform they're already consolidated, and so they can just, you know, operate very easily. I would like Rasko to show myself on the screen, but I don't know how to do it. Rasko is suggesting me, and I would like you to see me, but I don't know how to switch from my presentation to my camera. If somebody tells me, perhaps we should have closed the sharing of the presentation. That was easy.
Oh, it works.
Okay.
It works.
Okay, so I've closed it. I don't know if you can see me, but I'm here.
We see you.
You see, okay. So this is me. Thank you for your attention. Thank you for the opportunity of presenting. I know that I had 30-minute slot, so I just wanted to stay in the 30 minutes. And if there are any other questions, I'm happy. You have my contact details eventually. And wish you all the best for the continuation of your very interesting conference.
Thank you, Enrico. Please stay healthy, and I wish you a nice day. Bye-bye. Ladies and Gentlemen, wir haben wieder ein Päuschen. Das heißt also wieder ein bisschen die Beine vertreten und sich freuen auf den nächsten Beitrag, der dann um 15 Uhr startet. Ja, also kurz vor 15 Uhr werde ich dann wieder in Erscheinung treten und wir hören dann noch einen Beitrag von Wolf Stumpf. Bis zur Pause oder bis zum Ende der Pause. Alles Gute. Tschüss.